of first-time homebuyer workshops with TD Bank. They are a sponsor of these workshops, and we appreciate their sponsorship. Otherwise, we wouldn't be able to bring some of this information out to the community. So I want to thank Peter for that. Also want to thank Maria Garcia for partnering with us, because usually we work with a community-based organization, and I know that you work with a lot of first-time home buyers. Also, as part of this initiative, we always tap into our chamber members who have expertise. So I'd like to thank Fran Reali of Better Homes and Garden Safari. Do I got it right?
You got it all. You got all the initials, all the letters, everything. Yeah.
And Stefanie, I'm not going to say your married name. It's Stefanie DeMario.
She's very good looking, so it's worth.
And she is with Angiuli and Gentile, and she's an active lawyer here on Staten Island. So everybody today is going to add a little expertise to their comments. So I guess we'll start the program off. I'll start it off with Maria to say a few words as our partner, and then we'll kick it off to Peter.
Hi, good afternoon. My name is Maria Garcia. I'm a HUD certified housing counselor who works for Northfield Community LDC. Northfield Community LDC was established in Port Richmond in 1978. Our economic development activities are centered in Port Richmond in the North Shore. However, we serve the entire borough with our housing resources, including with the recession. Northfield Community LDC has been a HUD certified housing counseling agency for the last 2 decades. We have trained and experienced housing counselors, and we provide individual counseling, which includes budgeting, foreclosure, helping our clients to purchase homes, and then of course in that making sure that they qualify for any grant available for them as first-time buyers.
Okay. Alrighty, Peter, I'm going to pass it along to you, and I'm going to start the presentation, okay?
Very good. Thank you very much, Jillian.
Go. 1 second, I'm just going to get this set up and get ready to go.
Well, good afternoon, everyone. I'm Peter Chace. I'm a mortgage loan originator with TD Bank. Thank you, Linda, for the introduction. Thank you, Jillian, for coordinating this. Maria, it's good to know you. A little background on myself. As I said, I'm a mortgage loan originator with TD Bank with 11 years of experience, 2 years at TD, 7 years at Chace before TD, and another bank before that. So I've helped hundreds of people realize home ownership. And it's my pleasure to impart some knowledge this afternoon, so that if you're planning, Stephen, I think you're the only one on the call who might be planning a purchase, but if you're planning a purchase, I can help you understand what a lender is looking for and how you can plan to make this big step, because it is part of the American dream. I remember when I bought my first home, how proud I was to have accomplished that. I'm originally from Virginia. I grew up in Virginia and Memphis, and then we relocated to the Northeast, to New Jersey, and then Long Island, and I've lived in New York for 25 years. So I consider myself a New Yorker, and on a loan basis, I am a New York City specialist. I think Linda asked me what my range is. We can do anywhere in the TD footprint, which is Maine to Florida. So let's go through. There's a deck here. If you want to advance the slide, here we go. This is the first. We're going to go through this deck on first-time home buyers. Stephen, if you have questions, there'll be a Q&A later on. If they're really getting into the nitty-gritty of what your particular situation, I encourage you to take my number, take my email address, contact me after the session, and I'll work with you one-to-one. Okay. So we're going to go through the financial benefits and realities of what you should expect when you're taking on home ownership, because it is a big undertaking. It'll be the largest probably loan you'll take on in your life. I'm sure you'll have lots of questions about what it entails to buy a home. So we're going to go through some of those. We're going to talk about how your credit scores impact the kind of mortgages that you can get, and how it's going to help you if you have good credit, to get the best type of mortgage rates out there. And if you don't have good credit, how it's going to hurt you from getting maybe even qualified. So it's important to know what your credit looks like. We're going to go over the costs of buying a home. People sometimes do not realize that a certain amount of your own money is put into buying a home. That's establishing equity, and we'll go over the different down payment options, but there's always money of your own involved. We'll go through the steps of the mortgage process and some of the options, the type of mortgages that are out there. And then at the end, there are some tips about how to maintain your home and make sure you have money in savings so that you can plan it for repairs and keep your house tip-top shape. Okay, you want to next, please? Can you advance, Jillian? Great. Okay. I think can you go back one? Introduction. There you go. Okay.
Yeah.
So I think the question you need to ask yourself is, am I ready? Am I ready to purchase a home? How much can I afford, and how much does this all really cost? As I mentioned, you have to have some savings to buy a home. It's really virtually impossible to buy a home without some of your own money. There is grant money available for first-time home buyers. Research is definitely necessary. Garcia can probably help steer you towards some of the options you may have. If that will help you with down payment options, if you need that. Typically it's 20% down, but we have programs for as little as 3.5% down, and we do accept grant money if you can find it and qualify. My experience, it's best obtained the beginning of the year because that's when the budgets are reset. I don't know how much is available in the fourth quarter, but it's something you can really look into doing. How much do you need in savings for a down payment? Like I said, and it ranges from 3.5% to 20%. And then don't forget there are closing costs. And there's a transactional cost of getting you into your home, and there are taxes depending on where you're buying. In New York State, you're going to pay a mortgage tax to buy your home. It tends to be a more expensive state to buy a home. So that is something that you'll need to understand. New York is also an attorney state. You will need a real estate attorney to help you with the transaction, and that is something you'll have to plan on that cost. So there's other costs. We'll go through that as we go further through the program. We'll help understand what is involved. What kind of credit scores do I need to buy a home? Basically, the minimum is 620, and the higher you go, if you get above 800, or above 780, really, you're going to have the best mortgage options are out there, because a credit score is an indication of how well you've managed your credit in the past, and how likely you are to continue to manage your credit responsibly. So lender is going to look at those credit scores as an indicator and reward you with the best mortgage rate out there if you have good credit scores. What are the steps in the home buying process, and where do you start? Where you're starting today is a great way to start. Talking to someone like myself who's a mortgage loan originator. How long does it take to buy a home? We'll go through the timeline. I would say plan on 40 to 60 days to generally get into your new home. 30-day closes are very tough right now. There's just a lot of loan volume, and I wouldn't expect it. So I'd say 40 days, 60 days is usually enough time to get you in your home. How can you make sure you're getting the best loan possible? We'll go over that as we go through the program. You're going to want to talk to a couple of lenders. Often start with the bank where you have your checking account. Talk to me. Do a little cost comparison. You want a great rate, but you want a responsible bank that you feel you will be happy at doing business with, and a loan officer is going to manage the process well for you. I'm getting a mortgage loan, and I've heard the term blah, blah, blah. For example, TRID, which is a sort of a combination of truth and lending disclosure. If you have questions like that, and first-time homebuyers do, ask your loan officer what it means. I like working with first-time homebuyers. There are a lot of questions. Be happy to answer any and all questions. And where can I ask for help, and where can I get more information? Next. Okay, goal setting. What is your biggest question about buying a home? What are some of the benefits of buying a home? Stephen, do you have any of these particular questions? I mean, I think you realize that it's great to own your own home, okay? Why don't you move over to the renting versus buying screen, Jillian? So if you're living in a rented apartment, sometimes they say, oh, you can't paint, you can only have white walls. You know, you can't really decorate the way you want. When you're buying a home, you have the freedom to furnish it and decorate it just as you like. You can pick, you know, you can pick a neighborhood that you really want to live in and buy into that neighborhood. You're going to be, there's tax benefits to owning a mortgage because you can deduct taxes and interest that you pay on your mortgage from your federal taxes. So you're going to be able to shelter some income from taxes. So those are some of the benefits of owning. Buying does tie you down. You're not going to be able to like pick up and go. When you're you're renting an apartment, you can move after a year if you don't like it anymore, or you know, you decide to, you know, just move on. If you own a home, you're either going to have to sell that property, or you're going to have to, if you're going to keep it and not live there, you may want to put a tenant in there. So that's, you know, that's something to think about. It is a commitment, and people usually put down roots after a few years, and they're settling into a neighborhood, and they really decide this is where I want to be for the foreseeable future. Perhaps if you're a parent, you like the schools that your children are in, and you really want to stay in that neighborhood. And so these are some of the things to think about when you're comparing whether you should continue renting versus whether you should buy, you know, buying a home. Next, please. Okay, so I think it's probably good, and a lot of people don't do this necessarily, but Stephen, I know you can't really answer me, but have you ever done a budget? It's good to understand sort of how much money is coming into your household each month, and what are your other expenses, so that you can figure out whether you have the money to take on a mortgage. Okay, good. Not everyone does, but it's a really good step to understand, to put it down in paper so you can see. You'd be amazed how many people are spending, you know, hundreds of dollars on designer coffee each month, when that money could be better put into the bank. You know, buy your own coffee pot, make your own coffee, and save that money towards your down payment. I mean, let's face it, spending some money to enjoy life is part of the pleasure of money. But when you're looking to buy a home, you need to make sure that you're saving enough to have the down payment to get into your dream home. Okay. Have you checked your credit report? So there are 3 credit bureaus. You as a consumer have the right to go to each one of these credit bureaus one time a year to check your credit. I would advise you to do it. You can go directly to Equifax, Experian, or TransUnion, and these are great. This is a great page because you're going to see the website address for these different agencies and their toll-free numbers, so you can contact them. There's also an agency that's actually, I mean, there's actually a annualcreditreport.com is sponsored by these 3 agencies. You can contact this annualcreditreport.com, and you can inquire about your what your credit report looks like. It's good to know how your credit is reporting before you get started. I've met people who haven't done that. They come to me, they've already started looking for a home, and they haven't checked their credit, and their dreams are sort of dashed because they unfortunately have some blemish on their record. So this is a good way to do some checking preliminarily, so you know what your credit report is looking like. It's important to have 3 to 4 active credit lines. I'm not saying you need to be actively in debt, but it's good to have enough credit history so that the agencies can report scores from all 3 of these agencies to us, because it's usually 3 or 4 different credit lines reporting so that we can get an accurate picture of your credit. So let's go to the next slide. And it's important to this URL here. You can actually it should click through, and if it's important to check the accuracy of your credit report, because there can be inaccuracies in there. It's going to have really everything in there about you since you started your first credit line. So it's going to go back to the beginning. One thing I can caution you on is do not close out your oldest lines. Even if you're not using it, bring it down to 0 and just let it sit there. Because if you close it out, it'll shorten your credit history, and that can be a problem. I'm actually going to be doing a credit talk in a couple of weeks. So if this topic interests you, Stephen, you might want to sign up and come back for that. There's sort of a lot to know about credit. There's something else you should know. Let's say you have a credit card and you've got, let's say, $1,000 limit. Don't use more than 10% of the line more than 30 days. It's going to bring down your score. So try to use your credit moderately. Use it by all means. Pay it off. And if you're going to carry a balance, try not to use more than 10% of any one line. What I mean is, and let it go beyond 30 days so you're paying interest on it. The agencies are going to start looking at that and lowering your scores. And when you're planning to get a mortgage, which is the biggest purchase of your life, you want the highest scores possible. When someone is going through the mortgage process, I'm like, don't go buy a car, don't lease a car now, don't open new lines of credit. Just get through the process, get you in your house, and then you can go furnish your house with furniture and open new lines of Raymore and Flanagan or whatever, but don't do it during the process because we want to just get you through. Okay. Like I said, check your credit when you go to these. Let's just say you're going to go to annual credit report or you get your credit report. Check it for accuracy. They're going to have variations of your name, every address you've lived in while you've applied for credit. Old lines going back to maybe your first credit card you applied for in college. It's all going to be on there. And, but it's really the most important to pay your credit on time or early. Make sure you maintain everything that you're borrowing in a really responsible way, especially when you're planning to buy a home. Okay, so let's talk about budgeting for home ownership. How much can you afford? How we look at it, Stephen, I know you can't answer me, but if you work for somebody, then you are considered a pay stub and a W-2 employee. And how we look at your income is we'll take your pay stubs, we'll project it out to 30 days, and then we'll do a ratio. We'll do 43% of that, and that's the maximum. That's your maximum DTI that you can qualify for a mortgage under general circumstances. So if you're curious, take your pay, multiply by 24 if you're paid on the 15th, and 26 times if you're paid on an odd date, not the 15th, but on a different date of the month. Divide by 12, and that'll be your monthly income. And there we take 43%, and that's how much your qualifying income is. And from there, what has to fit in there is your mortgage, the property insurance, taxes, mortgage insurance, if you're going to be carrying that. We'll get into that a little bit more. So what is the debt to income ratio and why does it matter? A bank's going to look at the money that's coming into you each month, and they want to make sure that your total debt to income ratio is not going to exceed 43%. Anything more than that, and it's going to be hard for you to handle in the long run. You need money to eat. You need money for put gas in your car. You need money for other things in life. 43% is the industry standard. Okay. Okay. Do you want to advance to the next slide, Julian? Let's see. So this is, I think Stephen's already does this. He already creates a budget, but here you can see this in this bottom left, it's got a grid. You can actually put in how much you spend on your your cell phone bills, how much you're spending on student loans, how much you're spending on groceries, medical expenses, your pets, etc. And it'll give you an idea of where your money is going. And if something is lopsided, like you're spending too much money on eating out, you can dial it back, start eating more at home, put that $100, $200, $300 a month, whatever it is, towards a savings account so you can start building up your savings for your down payment. Okay, so what's the right down payment amount for you? If you're lucky enough to have started savings early, or perhaps your family can help you, gifts from family are completely fine, only family. But we can accept that when you're buying a home. But let's just say if you're lucky enough to have money coming from family, or you've saved it, 20% is rule of thumb, or more, and that's great. With 20% down, you won't pay private mortgage insurance. If you're putting less than 20% of your own money into the deal, you're going to have to carry private mortgage insurance for until you build up 20% equity into your home. Okay, if you don't have the 20%, there are low down payment options available. You can do as little as 3.5% down through the FHA program. TD also has some first-time homebuyer programs where you can do 5%, 10% down, or something in between. So talk to when you're getting ready to buy, talk to someone like myself. Tell them, this is the money I have available, liquid. Sometimes people will look at their retirement money. They've accumulated money in a 401k, an IRA. They can access it even though they're young and there may be a tax penalty. It may be worth it to take that money for a down payment for a home because it is an important step in your life and it may be worth it. But talk to your mortgage officer. They'll help you figure out what the best down payment percentage is for you. Okay. You also don't want to wipe yourself out though. So you don't want to dig so deep that you go into this house and you have no money left over, because with a house, things can happen. You can develop, your roof can develop a leak, or some repair could need to be made, and you need to have some money on hand for future repairs. Okay, next. Okay, I think we sort of covered this. How we calculate your debt to income ratio. They're going to look at your housing ratio, which is just the cost of the house. I mean, the mortgage, the taxes, and the insurance, and possibly mortgage insurance. That's your housing ratio. And then they're going to look at your total ratio, which is, we pull your credit report. We're going to see what else you may have. You may have a car lease. You may have student loans. You may have credit cards that you don't pay off at the end of the month. Your mortgage officer will ask you, do you typically pay off your credit cards at the end of the month, or do you carry a balance? Anything you're carrying forward 30 days, we're going to have to add into your debt to income ratio, and ultimately come in at 43% or less. And that's how you're going to be qualified. In some instances, we can get your debt to income ratio up to 49. If it's a conforming loan size, which means that the overall loan is $510,000 or less, that's a conforming loan size. And if Fannie Mae or Freddie Mac likes the rest of your application, you've got a steady job for a certain amount of time, you've got that certain amount of money in the bank, you may get approved for a little bit higher, but rule of thumb is 43, and anything north of that has to be sort of by exception. Next. How much does it really cost? All right. Down payment, we've sort of talked about. Depending on the type of mortgage you're going to go for, anywhere from 3.5% to 20% down. Needs to be in the bank. And when you're in the contract to buy, it needs to be absolutely there in the bank, verifiable. It's not like it's coming. I'm going to get a bonus next week. The underwriter is going to need to see that. So we're going to need to see the down payment in the bank account. As I mentioned, gift money is fine from family, and this is very common with first-time home buyers. Parents, grandparents can give a no-strings gift to you. We document that by they create a gift letter. The money flows over from your parents' account, let's say, to your account. We'll get a copy of your parents' bank statement and yours showing it there. End of story. That's how we do it. So If you don't have your own money and your family's willing to help you, this is something to keep in mind. Closing costs, it depends a lot on where you're buying. Stephen, I'm not sure if you're buying in New York City, whether you're buying, people are looking a lot to the suburbs right now. Suburbs are really having their moment. I think people are evaluating, you know, where they want to live because we're spending so much time at home. So it sort of depends on the locality. Each state has their own tax amount. Transfer tax is paid for by the seller typically, but the mortgage tax is, and the recording taxes are paid by the buyer. So, you know, and it's a hefty percentage. If you wanted to talk offline and I can get an understanding of where you're looking to buy, I can get you a better idea of how much exactly that would be. Now, as I've mentioned, taxes and insurance are part of the expenses of having a home. You have the option in New York State of having the bank escrow, which means that along with your mortgage payment, you'll be paying taxes and insurance to the bank every month. They take the money, they put it in a holding account, and when your tax bill is due or your insurance premium is due, the bank pays it for you and sends you notification that it's been sent over. So it keeps it current. The banks like to do it because you'll never fall behind on your taxes in particular or let your insurance lapse. So, but you have the option of waiving that if you'd rather control that process. However, you're going to have, one of the closing costs is setting up of escrow. If you're going to have the bank set up escrow, a certain amount of money at closing will be sent over to put, they're going to set up this holding account immediately at closing, and it's a hefty portion. It can be anywhere from 3 to 4 to 6 months of taxes and insurance payments in a holding account. And you're going to have homeowners insurance at the closing. You're going to pay for it 1 year in advance. So you'll need to, that's something you'll need to anticipate. You know, buying an insurance policy can run you anywhere from $500 to $1,500, depending on how big a home it is, where it's located, the value, and so forth. So in addition to the costs of just getting you into your home, as I've mentioned, homes, you always need some money, extra money to keep things fixed. And you may want to be fixing up your home anyway. After you want to make it into your own, to your own taste, you want to remodel some. So repairs and maintenance costs are always something you should keep in mind. Now, I'm not sure, Stephen, if you're just thinking of buying a house or whether you might consider a co-op or a condo. Both of those, all right, so if you buy a condo, you are actually buying, it's considered real property like a house, and even though it's an apartment, you are buying real property and you're going to be paying your own taxes, and you'll have to carry your homeowner's insurance with that, and you'll be carrying like an HOA, homeowners association, or common charges. That'll be part of your monthly expenses. Co-op is an interesting thing you don't see in too many places outside of New York, DC, Boston, a few other places, but pretty unusual outside of New York. Really is the concentration of where co-ops are. And if you're thinking of apartment living, it's a really good value. You'll get more apartment for your money than you will with a condo by looking at a co-op. Like a condo, you'll have a monthly maintenance fee. And it will cover basically all the expenses outside of your mortgage. All the taxes that the building pays will be part of that monthly maintenance fee. You will have to submit a board package. They're going to want to make sure that you are financially solvent, and they're going to be picky about letting you in because the health of the building depends on the strength, the financial health of the owners in the corporation. A co-op, you buy shares of a corporation. Okay, but if you're thinking of apartment living, I would strongly consider both condos and co-ops and see what's available. Speak to your local realtors and and see what's in your price range. Next, please. What is this slide? Okay, I think this is helping you understand your mortgage affordability. They're going to, after you've done your spreadsheet and you understand what your total monthly income is, they're going to have you total up your monthly liabilities, the other expenses that you have, and then your housing expenses, and give it a grand total so we can understand what percentage of your income is going to existing and the new debt you'll be taking on with buying a home. Next, please. Okay, so you've done your homework, you've done a budget, you've got your savings, it's in the bank account, you're good to go, you've checked your credit, you're good to go. Next step is really to go to the bank and talk to a loan officer and start getting ready to be qualified for the loan, okay? First-time home buyers, I would say 9 out of 10 times will choose a 30-year fixed rate mortgage. I think it's a really good option to start with. Perhaps if it's a very small mortgage, it's an not insignificant, but like your mortgage payment is fitting into your budget in a small way, maybe a 15-year. But generally 30-year fixed rate mortgages are the options that first-time hires go for. So you want to go in and compare. There's another slide which will talk about fixed versus adjustable rate mortgages, which I'll talk about in a bit. So find out, do some cost comparing on what kind of rates the banks are offering for a 30-year fixed rate mortgage with the credit score that you have and the down payment that you're planning. You'll want to get pre-qualified, and your realtor will confirm this. If you go out and go new home shopping and you do not have a letter from the bank saying you're qualified, they're really not going to take you too seriously. So you don't need to go to more than one bank to be pre-qualified. Just get started with one. And I'm not saying you only need to talk to one lender, but to actually go to the step of getting pre-qualified, I think you need one to get you into the home shopping process, okay? Because it'll show that you're qualified. You have income, you have good credit, you have enough assets for the down payment, and the bank has looked at this, okay? And then you'll decide whether you're going to be looking to buy a house. So residential properties are a 1, 2, 3, or 4 family house. Anything larger than that is considered a commercial property. So we're not going to help you get a residential officer like me can't help you buy an apartment house. It's just like a 1 to 4 family house or a co-op or a condo. Those are really the options, okay? A banker like myself will also help you. I always give my clients a closing cost worksheet. Once I understand where the property is and what type of property, I'll give you an estimate of what the cost would look like, so you can anticipate that. And once you get going, we're going to want to, I'll tell you what the documentation will look like. Stephen, if you work for somebody, you're an employee, we're going to look for pay stubs for 30 days. We're going to ask for your W-2s for the last 2 years. I like to look at your federal tax returns for the last 2 years. I don't always send them to the underwriter. We sometimes can do it with just W-2s and pay stubs, but I like to preview tax returns because sometimes things will be needed that I can anticipate by looking at them. We're going to look at your bank statements for the last 2 months to see that you have the funds in there to close, do down payment and closing. And we're going to do a credit pull once. It's good for 90 days. Only good once. I mean, we only have to do it once. It's good for 90 days. It should not bring down your score. I can't prove that, but having done this for years, generally a mortgage inquiry will not bring down your score. I would be, unless your credit is really, really marginal, I wouldn't worry about having a bank do a mortgage inquiry, because you're going to need to a bank has to do that before they can really qualify you. Next slide, please. Okay. So I was mentioning 9 out of 10 of my first-time home buyers choose 30-year fixed-rate mortgages. This is a longer-term option you can see on the right-hand side. There's lower monthly payments because they're pushed out for 30 years. The rates are going to be a little bit higher than a shorter-term mortgage, and you'll pay more in the long run because you're going to be paying the bank back over 30 years. But something to keep in mind, most people don't stay in their homes for 30 years. I think typically it's 7 to 8 years and people move on. So it's going to cost you less to have the home for 30 years. It'll cost you less to have this home and pay over a 30-year mortgage than it will be if you're paying over a 15-year mortgage. Well, payments are almost twice as expensive. Now, the benefits of a 15-year mortgage, or in some places offer 20-year or 15-year, is your interest rate will be lower. The monthly payments are higher, but you're going to be paying less interest back over because it's only a 15-year term. So if it fits well into your debt to income ratio, the 15-year payment, and you know you're never leaving, or you want to own this home outright without a mortgage, think about a 15-year. Another thing I tell my clients is, if you take a 30-year mortgage and you decide you're not obligated to pay that 30 years exactly as billed, that's the minimum due. You can pay more. You can rush it. You can pay double. You can pay extra payments. You can accelerate. There's no restrictions on prepayment. So in many cases, a 30-year mortgage is the ideal type of mortgage to take, especially if it's the first time out. Next. Okay, let's see. Fixed rate mortgages bring with it comfort, because you know your rate is not going to change over the life of the loan. Right now, rates are at near historic lows. You could probably get a 30-year fixed rate mortgage for around 3%, maybe 3.1. We were getting people into the high twos. It sort of depends a little bit on the market, but in any case, that's remarkable to have rates that low. And if you lock in a fixed rate mortgage, now you can only lock a rate once you have a property and you have a contract. So when you're shopping, you can't lock down a rate. But in any case, 30-year fixed rates are amazing. And it doesn't change for the life of the loan. Adjustable rates. Right now, adjustable rates are not quite the bargain that they were a few years ago when rates were higher. The adjustables were considerably lower. And I've done a lot of loans for sort of Wall Street executives, make a lot of money buying very expensive co-ops condos. They almost always opt for adjustable rate mortgages because they can save thousands of dollars a year. And they know they're not going to live in that apartment for more than 5 or 6 years, and they're going to trade up, move on, move out of the city, do something else. But adjustable rate mortgages are fixed. Let's say they come in like 3-year adjustable, 5-year adjustable, 7-year adjustable, 10-year adjustable. The rate is fixed for the first term, like the initial 3 years, 5 years, 7 years, 10 years, and then it becomes, well, it had been annually adjusting. It's changing now. It's going to be 6-month adjusting, because banks are switching away from LIBOR and into another index, and it's becoming a 6-month adjustable. Talk to your loan officer. You can certainly compare fixed to adjustable and see if it's the right type of loan for you. Generally, large loans, I would say $750,000 or greater are where the appetite for adjustable mortgages lie. Below that, most people take 30-year fixed or 15-year fixed. Next. Conventional, I think I touched upon that. Conventional loan means that it fits into conforming loan guidelines, caps out usually on a single family home, 510 and change. Anything north of that is considered a jumbo, okay? Banks issue loans, and then they bundle them into mortgage-backed securities and sell them into the secondary market. Okay, or they're sold into the secondary market to be bundled into mortgage-backed securities is really the order. And then the money comes back so that banks can loan again. So the reason we mentioned conventional or agency loans is these are the agencies that were created to buy loans from banks. It was created in the 20th century. And you'll read in the news, some of the politicians in Washington would like to abolish these agencies. The banks do not want them abolished. They're actually quite important because they create a market for the mortgages. FHA is a federal agency. They have programs to help first-time homebuyers. FHA mortgages. TD is an FHA lender, so was Chace. It is a great program for someone who does not have a lot of money for a down payment, but otherwise has the income and the assets to qualify. It's a little bit expensive. because there's an administrative fee of 1.75% added to your closing costs, but FHA is a good option. I use it as a fallback. I look at to see if my clients qualify for the first-time home buyer programs that we offer. And if they don't, we look at FHA just because it's more expensive. And the private mortgage insurance that you'll need to carry if you're putting less than 20% in is a permanent feature with FHA. I'm pretty sure it's still a permanent feature, and which means you have to refinance to get it off. So pros and cons, good program, but I like to look at all my options to make sure my client's in the best option. VA, Stephen, if you've done military service, you're entitled to a mortgage technically with no down payment. TD's a VA lender. Most of the major banks are. Get your certificate of eligibility, speak to your mortgage officer. It's a great way to get a home if you have done service to your country. Thank you. And then USDA is really for rural farms and small towns and rural areas. Next. Okay, so we've talked about what's the best option for me. Do I want a 15 or 30-year term? Do I want a fixed rate or an adjustable rate? Is my loan size conventional, or will it fall into the jumbo category? What kind of down payment am I going to do? Am I going to do a small down payment, pay the mortgage insurance, or am I going to do 20% and I don't need the mortgage insurance? And here are some, here's sort of a case study. After saving for several years, Sophia and Nate are ready to buy their first house. They've narrowed some options, but are still deciding on two major pieces. Should they aim for a 15 or 30-year mortgage? Should they pay a smaller 5% down payment or a 20% down payment? The 15-year mortgage would save them money and interest in the long run, but will stretch their monthly budget. Paying the larger down payment will save them money over time, as well as on the upfront cost of private mortgage insurance. How would you move forward? What other things might impact your decision? These are sort of the things I've been talking about. If you don't have the money flat out to do a 20% down, you have no choice but to do private mortgage insurance. But if you do, you need to weigh whether it's better to have the money keep the money in your account versus putting it in the equity in your home versus the cost of the private mortgage insurance. Next slide, please. So as I mentioned, you need to go to a bank to be pre-qualified. I recommend just talking to one bank for the pre-qualification. And then once you have an accepted offer, do some comparison shopping among banks that you either do business with or in your neighborhood or near where you work. Do some cost comparing and say, I'm buying a home and this is the rate that I'm offered by Bank A. What is your rate today? In addition to a great rate, you want the mortgage process to run smoothly. Make sure that the loan officer is giving you the adequate attention, is the type of loan officer that communicates well, that is upfront about to set expectations on how long it's going to take you to get through the process. People, the consumer, Stephen, you or whoever's shopping for a home, often just focuses on rate. And there's a lot more to a great mortgage than a great rate. You want a great rate, I get it, but there's more to it. So make sure you're looking at the whole picture because you're going to have a relationship with this bank for many years. Okay, so as I mentioned, we're going to look at a few things. We're going to look at your credit score. That's going to determine the kind of rate you're going to be offered. We're going to look at your debt to income ratio. That's going to help understand how much mortgage you can afford. What kind of money you have available for down payments and where it's going to come from, and how long you've been on your job. Generally, if you work for somebody 2 years, work history, even we can do shorter. Let's say you're going to need a couple of years of W-2s. If you're right out of college, you're a new entrant to the workforce, we can use your college transcripts and diploma to show that you've been laying the groundwork for the job that you landed, and we can generally do it. If you're self-employed, it's another whole thing. If that applies to you, Stephen, speak to me. We need 2 years of self-employment history with filed tax returns, current profit and loss. I have a lot of experience working with self-employed people. It's a little more complicated, but please speak to me. Next, please. Okay, this is a photo of a loan estimate. Some of you who've been in the business may remember the forms used to look like, but this is the when they revised it a couple of years ago, this is the loan estimate, and it gives you a breakdown of the loan amount and all the costs associated on page 2, and how much it's going to cost you to repay this over the life of the loan. And they compare like your initial estimate versus the closing estimates. Okay, next. And so now we're jumping ahead to, you know, like I mentioned, you're going to need if you're buying in New York State, you're going to need an attorney. The attorney helps you prepare the contract at the very beginning, and they also represent you at the closing table. And this is an extra cost. I would say, you know, if you're a union member, you could probably locate an attorney for not too much money, maybe $500 or $600, but it can be maybe $1,500, $2,000 to have an attorney represent you. But it's definitely worth it. They'll help because you're dealing with contracts. You want an expert to help you understand what you're signing. Also, they'll help you understand at the closing table all the paperwork that you're going to be signing. Your loan officer should also help you be able to understand the loan aspects of the deal and the costs involved. So take your time, do your homework as you're preparing to buy a home. Speak to your loan officer, locate an attorney, find a great real estate agent. And something you may not realize, a real estate agent doesn't cost you anything to work with a wonderful real estate agent as a buyer. It ultimately they'll be paid from the seller. So when you're on this side of the deal and you're buying into a home, take advantage of the fact that you're not paying for a real estate agent. They're a wonderful resource. They'll help you in so many ways. I can't tell you. They'll spend a lot of time help finding you the home that you helping you find your dream home in your budget in the neighborhood you want. Okay, these are just some tips about after you own your home. Make sure you've got some money put aside, an emergency fund for home improvements, home maintenance, and in case something breaks. Okay, so. And if you find yourself, God forbid, getting into trouble after you bought your home, there are some steps you can take so that you won't lose your home. But once you're in there, you have to make sure you continue to pay your mortgage on time to avoid the bank, going after you for foreclosure. But that, I'm sure, will never happen to you, Stephen. And anyway, that's an overview. I did a lot of talking. Hopefully you liked it. If you'd like to talk to me one-on-one, I enjoy working with first-time home buyers, and I'll help you understand. So thanks very much, guys. Shall we open it up for QA? Stephen, do you have questions?
Hi. Okay, so now I know that Fran and Stefanie are going to say a few words. Fran, do you want to go first? Unmute yourself, Fran. I'm gonna stop.
Okay, sorry about that. You ready for me?
Yep. Yes, Fran, you can talk a bit.
Okay, great. Well, Peter, that was a very in-depth overview. I did want to share that when you said you don't pay for a realtor, there are circumstances if we're representing the buyer and the buyer signs an exclusive agreement. Just like when you sign an agreement with a homeowner, the buyer could pay for a portion of the fee that is due the realtor. So I don't want Stephen to get a misunderstanding of that.
Thank you. I'm sorry, I didn't realize that. Thank you so much.
Yeah. So okay. So I just wanted to share with Stephen and everybody else who's listening what the program is when you're dealing with the opportunity to purchase a home. First of all, Stephen, it's a very, very exciting time. I love to shop. You might not love to shop, but we'll have fun shopping. And that's what it's all about, enjoying the process. And the way to enjoy a process is to first feel comfortable and confident and trust the agent or broker with whom you're working. I am a broker owner of my company, and we have 25 agents in our company that have the same work ethic and understanding of how to be involved with a buyer so that there is what we call a buyer consultation. So before we embark upon anything at all, we, especially in these times, we do a Zoom meeting, which is our buyer consultation. And during that time frame, you and I, or you and one of our agents at our company, will go over the program of what is expected of you and what you can expect of us. So the very first thing I want to share with you is, if you can see this up on the screen, I don't know if it's backwards, but this is the New York State disclosure form for buyer and for seller. So when you come to our office when you can, or on Zoom and we're doing our consultation, the first thing we're going to talk to you about is, who do we work for? Are we working for you, or are we working for the seller? You must feel comfortable and confident about who the agent is working for, so you don't have any misunderstanding about where you sit in the positioning of things. So we have several ways that we work this. One of those ways is to contract with the agent or broker to work with you as an exclusive for a period of 2 months, 3 months, 4 months, etc. During that time frame, you can be rest assured that that agent will be working to find you the proper property that fits your budget, which is most important. So remember, the disclosure is first, and there are several of them. The next disclosure that you have to be aware of is the fair housing notice. And that fair housing notice will be given to you, and it explains all the ways that we work to make sure that you are not treated unfairly in any way, shape, or form. And that is a total understanding from that point. Now, Division of Licensing Services through the Department of State for the state of New York also has a full sheet of information about this, in addition to the previous piece of paper that I shared with you. And then on the back of it, it does ask for your signature to say that you do understand that we do not discriminate, and that you understand that you don't discriminate. And we put this all in writing, so there's no, again, misunderstanding on how this procedure works. Now, all of this is happening prior to us talking anything about your housing situation. The next step is that if we're looking for a home for you, and the year that the house was built will dictate whether or not the home has been signed off on by the homeowner, whether or not they are aware of any lead-based paint or lead-based paint hazards in the house, and whether or not they've had any testing done, and if they have any paperwork in reference to that. And you will be made privy to that on any homes that were built prior to 1978, and before you make an offer on one of the properties, and of course before we show you the property. Now, a little tidbit I want to share with you is that, what is lead-based paint? Well, prior to 1978, lead was put into paint so that you don't have to paint your house every 2 years. And so the more lead that was put into the paint can or into the mixture meant it was more expensive of a paint, and the paint lasted for forever. Later on, towards 1978, they realized that it was a health hazard in many ways, and we have to make you aware of that. And by doing that, we will also give you a lead-based paint booklet, which may be upside down too. And this is mandatory for you to realize that these are some of the situations that you could come up against. And it is our duty and our job to make sure that you are aware of that. The other one, the other disclosure, as we continue on in the disclosure forms, is the disclosure to you, the buyer, for property condition disclosure statement. It's a mouthful. And what this basically says is that when we put a house on the market, there is a property condition disclosure statement for the seller. And that statement can be filled out by the buyer, by the seller, filled out by the seller or not filled out by the seller. And because there is a time frame within which, or not a time frame within which the buyer could come back to you, to the seller, most attorneys, have told the sellers not to fill it out because we don't know when somebody could come back to you. So because of that, we give you this disclosure form that you sign off on that says basically, since the seller did not sign off on the property condition disclosure statement, you, the buyer, will be given an opportunity at the closing to receive a credit of $500 against the purchase price of the property, and that will be upon transfer of title. That's closing, when you're sitting at the table and you're signing your life away, kind of. So those are just some of the things that we talk to you about when we first meet with you. Now, once we make a decision, you make a decision that we can work together, then we have to make a decision together how we're going to move forward. What is going to be our position as a buyer agent or a seller's agent? And this is how we'll figure that out when we speak. Now, the consultation goes on for quite a bit because we do not want you to leave our Zoom meeting or our in-person meeting confused or concerned about what direction you're going to take. By speaking with us, and then we start to go over your finances with you, and we share with you that you should meet with a mortgage lender, and we prefer to get, instead of a pre-qualification, we prefer to get a mortgage pre-approval. Why? Well, the market is a strong market for sellers, and buyers need to get as many tools in their tool belt as they can so that they can be presented in a very strong light to the seller when presenting an offer. So by having a pre-approval, it may take a little bit more time to get it, but at least your paperwork has been looked at. You've had some kind of longer conversation with your lender, like Peter, and that will put together a stronger package for you. Now, Department of State says that the minute we as agents and brokers start to talk to you about money, it's considered a substantive meeting, which means that now we're getting into the nitty-gritty of things, and we need you to figure out what direction you're going to go with in regard to agency. So that's something you've got to think about as we're talking over these numbers. Now, the other thing is that every company has a different form or tool to get your offer, once we find a house, to the table. So ours kind of looks like this. It's a little bit of a long sheet, and I know you can't see much of anything there, but we give this to you. We give a copy of this to you. We make you touch it and feel it and make sure that you know it doesn't bite and it's okay and everything is subject to your attorney's review. And why is this important? Well, this is the instrument that allows me or one of our agents in our company to present an offer on your behalf. Now it goes back and forth. If the seller doesn't like what the offer is, you may offer $50 and they may want $100. And then that's the art of negotiation. And we go back and forth. And that's something else that we as brokers and agents at the consultation will discuss with you about how negotiation works. Now, what you have here today, this is an encapsulated overview of what should happen when you meet with your realtor. But what you do have here on the screen is a team. what you're going to need when you actually decide that you're going to purchase a home, Stephen, is you need to select a team that you feel will help you get to your goal. And so you have Maria, you have Peter, you have myself, and you will have Stefanie as the attorney who is going to make sure that all of us are putting everything together to make it happen for you, so that the 30 years that you're living in your home, or the 2 years that you're living in your home, because now you've built some equity and you feel good about moving up, and home ownership is the best thing that's happened to you since sliced bread. You'll find that there are other things that you prefer in a home, because we always don't get exactly what we want, even if you custom build it sometimes. So these are the things that you need to know, and it's hard to absorb it all. I know the deck that was up had very particular pieces of information, but for me, we need to get to know each other a little bit first to make sure that we do feel comfortable working together. And either us or any realtor that you're going to work with, you have to trust them, you have to feel comfortable with them, and you have to have confidence that they're going to do everything that they possibly can to make this a smooth transaction. And sometimes you hear people say, oh, this is a good deal. I don't like the word deal. In 40 years of selling real estate, I don't use that word. I like the word transaction. It raises the level of professionalism. It doesn't make it sound like you're buying a shirt or a car off a used car lot. It's just my own particular craziness, and I am crazy, so that's okay. The first step to getting better is admitting it. So here we are, getting a little bit of an overview of what it takes to get you started on your search. And the one thing out of everything, if you can remember, make it a happy experience. Don't take everything so seriously and be so afraid to make the next step. If indeed you trust the realtor, your attorney, your mortgage lender, your advisors, everybody that's involved in this, if you trust everybody, and if you don't, wait until you find the person that you trust to put them on your team. And then you have a team that will help you get where you want to go and have fun with it. That's the best suggestion I could give you, the best tip. So I wish you lots of good luck, Stephen, and I thank you for taking the time to listen to what we have to say today.
Okay, Stefanie, would you like to speak? Thank you so much, Fran.
Sure.
Right, welcome.
First, let me begin by saying, Peter, absolutely wonderful presentation. I really enjoyed that, and I think that it's important for buyers such as Stephen and the like to have someone with your expertise on their team. And Fran, as usual, great. Thank you so much for that. And I think that the most important thing that you left us with, Fran, is that you do need a team. This is something that we will venture on together. And at least from my vantage point, the way that I handle my files is that I am doing this with you. I need you to feel comfortable in what you're going to be getting yourself into. So really, I am the last piece of the puzzle before we actually cross the finish line together. So my role in this is, once you've met with Peter and you know what your budgeting is and you know what you're comfortable with, and you've now employed Fran to go out on the fun journey with you in actually shopping, now you've found a piece of property that you want to purchase, and the seller has accepted your offer, and now you're going to be entering into an agreement as to the specifics of that, which Fran will walk you through. That was that sheet that she showed. I call it a binder, could be called an offer to purchase, but it's a meeting of the minds. It's that you know what you're going to be getting into, and they know what they're going to be selling for. And it'll include items that are going to be included in the home. It'll include an expectation as to when we're going to close, and it'll let us know the parties, because the sellers will have their own attorney. And that's important for me to say. I do not ever represent a buyer and a seller. And the reason why I shouldn't as an attorney is I will always give different advice to a seller than I will to a buyer. And when I am your attorney in the purchase, I'm yours. I have my loyalty to you and my confidentiality with you. But once we then have a meeting of the minds as to terms, it's standard in New York for a seller's attorney to prepare what we call a proposed contract. And it's proposed because I'm going to make changes to it. And I typically say to people, it could be the best contract the world has ever known. Best contract written. I'm going to make changes to it. Why? Because there are certain standard changes that I will make to a standard real estate contract, which we'll go over, that protect you as a buyer. But also there might be expectations that you have as a buyer that I need to make sure are properly laid out in the legal document of the contract. And we will sit together, whether it be on a Zoom meeting, whether it be in person, and go over the provisions of that contract so that you have expectations. And typically, what most buyers find comfort in is that in New York, you have a mortgage commitment contingency period. And typically that's a standard of 45 days. And what it allows you to do in that time frame is, as Peter had suggested, yes, when you have to get your pre-approval, you'll go to a bank that you feel comfortable with. But then there'll be some shopping that has to be done on your behalf with regard to rates, the mortgage professional, what you feel comfortable with. And that's what that 45 days, some of it at least, is used for. And the remainder of it is used to make sure that we get that actual mortgage commitment. And I usually say to clients, the mortgage pre-approval, you're dating. The mortgage commitment, you got that ring, they're going to walk down the aisle with you, and they're going to come to the table with the predominant amount of the equity that we need in order to close the transaction. Now, throughout the buying process, I'm sure if Fran is taking you around or one of her 25 agents is taking you around, there'll be things that they point out to you with regard to a home that you may want to call your attention to. For instance, the life of a water heater. What year was this installed? Is there a pool? That looks like it's a shaky deck versus this was just redone. Whenever a deal is about to be finalized, the discussion will be had with your real estate professional that you should be having inspections done. And the inspection is something that you get to choose whether or not you actually do it, but it's always suggested, at least if you're asking me, so that you at least have another set of eyes, a professional, come in and actually look at the property. And the inspection report is something that we can look at together to see what your concerns are, if there's repairs that you're going to be requesting the seller make or not. In addition to that, if we're handling a purchase for you, we will also get what's called a title report done. So you need to make sure as a purchaser that you are buying a property from someone who actually owns it. Imagine that. And also that they don't have encumbrances that you are then going to inherit, because we don't want you to inherit anything, or a past sin rather, of a seller. So we will be going through that title report search, making sure that you are getting exactly what you believe you are getting, and that you feel even more comfortable in the solidification of the transaction. And throughout this whole process, most of my clients will call me with a question. We're always there, myself and my staff, to answer a question, because we do know that, especially for first-time home buyers, and Stephen, you may feel this way, that every little thing you want to run by someone. And that's where the team comes in, as Fran said, because there may be something that you have to run by Peter, something you have to run by Fran, something that you have to run by me. I will never ask a client to just jump in a transaction and not feel comfortable, because that is never going to be a recipe for something that's good. When we actually start to approach a closing, I typically say to clients, a lot of individuals will then have to come together and actually come to a closing date. So you'll have to go through all of your underwriting process with your bank. The bank will then have to give you something called a clear to close. That's a green light saying we're ready. In simplistic terms, we're ready. You've provided us with everything you needed to provide us with. Thank you very much. And we will be there on the date of closing with the appropriate funds. And once we have that green light, then we get to scheduling a closing, and we all get to sit together. Hopefully we'll get to sit together. Could do things remote, but it's nice to actually sit at a closing table and see keys handed to you when you're making such a big purchase. To me, it's a nice feeling, but again, we have to go with the world and the times. But we will then get to the point where we're actually scheduling closing, and that will allow you then to make sure that you have movers in place, to make sure that you have all of your funds in appropriate order. But what I like to do is I will never plan to do any calculations at a closing table. To me, that's not proper preparation. I like my clients, whether I'm representing a buyer or a seller, to go into the actual closing room knowing exactly what the figures are. So it's our practice in our office to send closing figures at least 24 hours in advance. You need to have an opportunity to digest them, to know what you're signing, so that when we go into the closing the next day, you feel ready and you feel properly apprised of all of the specifics. So that's something that definitely a lot of clients appreciate, and I would appreciate it too if it was being done for me. With regard to hiring or at least consulting with our office, I will absolutely be able to provide you with a complimentary consultation if this is something that you'd like to discuss at this time, Stephen, you know, in addition to now. And you would have an opportunity to ask questions as to how the transaction is going to go. Today had a lot of information, which I think is great. And it's great that Jillian's that's recording this. So you can always go back and say, what did they say? But it's also nice to be speaking with regard to your specific situation and what your specific expectations are. And that's where the consultation with us on a one-on-one would really be beneficial for you. So you feel free to give a call to our office and give a chat with me. And I really wish you luck. It is a nice, exciting time. Like Fran, I love to shop, so it is very fun. I'm actually going through it myself. Peter, I may give you a call. So it's definitely a fun time. And good luck. Enjoy it. And if you have any questions, hopefully we can be your team.
Well, thank you so much, everyone. Linda.
No, Jill, I just wanted to ask, does anybody else have anything that they want to add before we actually close the session? No?
I do. I just wanted to share that, just like Stefanie said, what we also prepare for the buyer and or the seller, we have a sheet that breaks down their closing costs like the bank does, but at least when they get to the closing table, they have a better understanding of what their monies are going to look like. That's important. And the other issue is that we also work in New Jersey. We do all of Brooklyn, Queens, a smidge of Long Island, and all of Staten Island, and all of New Jersey. So as long as I have gas in my car, I go.
Thanks, Fran. Listen, I wanted to mention that we actually wound up with two other participants, Ona and Sundus, who have also came in. I know one came in a little bit later. So this whole session has been recorded. So if you came in late and you need a copy of it, please contact Jillian. She'll be able to provide it to you. I just want to thank everybody. You know, as you said, buying a house is very, very fun, but it's also something that, you know, people do only, you know, maybe one or two, maybe three times in a lifetime. And it's a really important decision that people make. And your first home in terms of what you need to know. I know there are a lot of young people out there that don't really understand what the process is. And we hope that this, you know, sessions like this are helpful to you so that you understand and you're not going in blindly and that you're educated. And everybody on this call today has been working in the field for many years and have great experience amongst the entire group. So, you know, feel free to reach out to the chamber. If you need to contact anybody on this call, we can provide you their information. We also have a list of members in various fields that can support inspection and, you know, a list of people from every industry that, you know, can help you with, you know, your quest to find your first home. So without further ado, Jillian, do you want to add anything or we'll just close from here?
No, just wanted to say thank you to all the panelists. Thank you, Stefanie. Thank you, Maria. Thank you, Fran. Thank you, Peter. And thank you, Linda, for staying on. Just everyone, thank you so much.
Thank you for inviting me. I really appreciate the opportunity.
Thank you. And thanks again. Yes,
and thank you to our
really appreciate everybody's being with us today. And thanks again to TD for really supporting the program.
Thank you.
Great.
Have a great day, everyone.
Thank you, everybody.
Take care.